Okay, retail sales numbers coming. Two quick notes. I'm going to be in the air flying today, so you can follow me on Instagram to see what I'm up to. I'll be at a special place, and you're going to see a lot of cool stuff, so follow me on Instagram. And we did extend the flash sale to the end of the week for those of you who emailed us and for anyone else. 69% off, largest percentage basis sale for the programs on Building Your Wealth. Link down below. Okay, retail sales numbers coming out in 30 seconds. Here's the expectation. The expectation for retail sales month over month is a 2% increase, up from the negative 1.1% previously. X Autos looking for a 0.9% increase. X Autos and Gas looking for a 0.9% increase. All of the numbers in the last report were negative. All December numbers were negative. January, we're expecting positive numbers. Retail sales control group, 1%. The numbers come out within about the next 10 seconds. So buckle up, folks. This could be a market mover. What do we got with retail sales? Are people spending money or not? Empire Manufacturing. Okay, holy crap. Retail sales come in hot, 3%. The expectation month over month was 2%. Oh my God, everything's hot. Hot, hot, hot. Woo! Retail sales, X Autos, month over month, expected 0.9. We got 2.3. We got 2.6 on X Autos and Gas. Retail sales control group comes in hot as well, 1.7%. Holy schnices. What recession, folks. Holy crap. People are right back to spending. What recession? You've got the NASDAQ trying to tick down a little bit on this. You got a red candlestick on the result of this news. The NASDAQ dropping about 20 basis points initially on this. But what recession, folks? Holy smokes. These are incredible numbers on retail sales. Again, retail sales advance beating by a full 1%. Not only are retail sales beating by 1%, on the month over month, but again, X Autos, X Gas, massive beats, beats by 1.4 to as much as oh my lord, that's actually that's a 1.4% beat, and that's a 1.7% beat. Holy moly, these are crazy numbers. Let's go ahead and actually look at the charts to see what's going on with retail sales. But people apparently spending money like crazy. This is actually something that American Express warned about, right? Remember, what did American Express say? American Express said people are spending through the recession. That's what American Express told us. And so what do we actually have here on the retail sales report? Monthly retail sales estimates have been revised. The fall of last month, they actually revised. X Autos month over month from negative 1.1 to negative 0.9. From negative 0.7 for X Autos and Gas to negative 0.4. So the last numbers were revised better as well. Holy smokes, look at that. January 2023, 3% advanced monthly sales. This is a big old boom right over here. Let's see what we got. Advanced estimates of retail, food, and service sales for January 2023, adjusted for seasonal variations, holiday and trading day differences, but not for price changes, were up 3%. Total sales were up 6.1% from the same period a year ago. What recession? Retail trades were up 2.3% from December of 2022. Food and service, holy crap. Food services and drinking places were up 25.2% from January of 2022. Sorry guys, I spent a lot of time at restaurants in 2022, mostly food, some drinking. While general merchandise stores were up 4.5%. It's people aren't buying stuff, man. People are going out getting drinks and food. This is nuts. Wow. Okay. So I want to see some more of the charts here. Let's see if we can get a little bit more. This is just some more info. Oh, here we go. Here are the charts. Let's also see what the suits are saying about this, because this is remarkable. I mean, this is a crazy beat here on a retail sales. Really, really incredible. Let's see where this is. So first, we're going to look at let's look at the adjusted for a moment here. We're going to look at the second column on the right. And potentially, the easiest way to do this is we'll look at the non-adjusted number here. And then we'll also look at the adjusted number here. I'm circling it just so when we zoom in, it's a little easier to look at. So what do we have here? General merchandise stores. Okay, what's the change here? Oh, these are just nominal numbers. That does me little good. I want the percent change. Okay, well, that's over here. That's second column in. So let's look at the second column in for the 1 month change. What do we have? That's 3.4% in general and merchandise. Department stores, 3.1%. So if you're into like Macy's and stuff like that, 3.1%. It's not actually that high. You've got electronics. This is non-store retailers. This is like your Etsy right here, 5.7%. Much higher than what you actually have for your merchandising stores. So that's pretty substantial. Food and drinking places, thank you very much. 24%. That's insane. Holy smokes. Clothing. We saw this in the CPI numbers. People spending a ton of money again on clothing. What the hell? 6.6%? Who's buying new clothes right now? I thought that was like after the pandemic, everybody went out to go buy clothes. This is crazy. Market's actually stable. Market barely cares. The market barely cares. Look at this for a moment. I mean, this could change during the day. But what did I tell you earlier in this live? I told you earlier, I go, look, the market cares about a recession right now. And earnings per share. And what are these numbers telling us? EPS go moon, baby. Moon. 2-week call options? Yes. No, don't do that. It's not advice. Gasoline stations up 5.1. Health and personal care stores, 4.9%. There's beauty for you. Food and beverage stores. Look, people don't care about grocery stores right now, even though that's up 5.8%. The big number is food and drinking. It's almost like people are like buying private jets and flying around to different restaurants and different places, going to have drinks with people who are hanging out with them and shadowing them. This is crazy. Look at this. Electronics and appliance stores, minus 6.5%. Getting smashed over here, the electronics. People just want entertainment. Who's more entertaining? Never mind. Furniture, home furnishings, 4.5%. That's pretty nominal. It's probably one of the weaker categories. Motor vehicle and parts. That's actually surprisingly low for motor vehicle and parts. So people spending less money on their cars, more money just drinking, and of course eating. It's not the only thing you can go out for is drinks. You can go out to like escape rooms drunk, or you could go to axe throwing drunk, or you could go, to a movie theater drunk. I'm sorry. Anyway, so retail, total retail, 6.7% increase. These are insane numbers. Absolutely insane numbers. So this is a crazy retail sales report, shows us where people are going. Okay, this is so those were, what do we have here? This is retail total, motor vehicle parts. Okay. These are pretty darn similar. We already talked about those. Preliminaries, we talked about these. Okay, just trying to get a little bit more color here. I mean, this is a phenomenal report for retail sales. And you won't believe this, okay? You won't believe this. Remember how I said earlier that what everyone cares about right now is EPS, right? We're over inflation. The inflation story is over. And how is the market reacting right now to a crazy retail sales report, which should make us nervous about pricing power and inflation and companies raising prices like crazy again, right? Should make us nervous in that. How is the market reacting? Stepbro not stuck. Stepbro not stuck. Stepbro out having a good time. That's what Stepbro's doing. Stepbro first is like, oh no, is he stuck? No, he ain't stuck. He's partying. This is insane. That's actually really, really good. The Fed might actually stick a soft landing. Could you imagine that? No recession, soft landing. Jerome Powell's right. Somebody asked me the other day, they're like, well, maybe Jerome Powell just wants to rig everything. Why would he want it to be good? Because think about it. If you're Jerome Powell, do you want to be wrong or do you want to be right? Well, obviously you want to be right. What if you're correct about the soft landing? What if Jerome Powell is right, that inflation ends up being transitory, sticks a soft landing, and actually navigates us into a boom decade of the 2020s? You know what's going to happen to Jerome Powell? They will make statues of that son of a gun. People will start worshiping Jerome Powell if he can actually stick this. So if you're Jerome Powell, you want to be right. And if you could be right about those two things, you will go down as probably, until next time, one of the greatest Fed chairs ever. And the guy with the money printer. That's crazy. What's CNBC saying about this?
I digress.
I've always liked Steve. Joining us right now to dig into the new retail sales numbers and the state of the consumer is Terry Lundgren. He's former Macy's president, CEO, and chairman. Of course, he's now the CEO of TJL Advisors. And Terry, what do you think of these numbers?
Of course he's a consultant now.
As Rick was pointing out, the first time since October that we've seen a plus sign in front of the retail sales.
It's definitely stronger than we expected, Becky. It demonstrates that the consumer does still have firepower and is willing to spend, and this definitely surpassed our expectations. And I have to say, when you think about one of the biggest reasons why I'm surprised is because we're going against such strong numbers, and retailers are always looking to beat last year and the year before that. And this compounded gain is quite extraordinary. We've had 22 points of gain over the last 3 years in retail sales. So we're adding on top of that. I think it's
He's right. I mean, think about all the COVID sales, right? You're adding on top of those. It's nuts.
Earlier with Jan Niffen, and he was just pointing out that what you've seen for a while now has been that the luxury brands have done much better than some of the lower end brands. And that makes a lot of sense when you consider inflation really cuts in higher food inflation, higher prices at the pump. That cuts in to lower income consumers' ability to pay for things.
No question. We've talked about that in the past, that a larger and larger percent of net income for the lower and middle household income consumer is going toward shelter, food, and energy. And when that happens, it obviously just reduces their ability to spend on discretionary items. So that doesn't affect that high-end consumer. You've got LVMH, one of my favorite companies, on the screen, and that consumer is going to continue to spend. And I think when there's more international travel, that business will go up even further, because many people like to shop when they're on their vacation or when they're traveling.
So for a long time, the markets, people in general, have been worried about what's happening to the economy.
That's a good point, by the way. When you travel, you just buy stuff because there's nothing else to do other than drink, buy stuff, and party.
Fall by the wayside, when you're going to see the jobs market get tougher. None of that has happened yet. Is this waiting for Godot, or you think this really is going to happen later this year?
I do think it's going to eventually happen. You know, one of the key numbers here is the savings that consumers have. And historically, we Americans spend our savings, you know, in the middle and lower household incomes. We spend our savings, get it all the way down to zero. That hasn't been the case since the stimulus packages helped support those savings accounts. And it's maintained. So while that number has come down dramatically over the last 2.5 years, consumers still have more than $1 trillion in excess savings versus 2019. That, combined with higher wage growth, and as you mentioned, this very low unemployment number, is giving that consumer still the confidence to continue to spend. I do think, however, that as these inflationary bites keep challenging this consumer in terms of taking pieces of their overall net income, that consumption will slow down over time. And again, I had to remind us, we're just going against very, very strong retail sales numbers.
All right, we're going to pull off this guy. Listen, he is absolutely 100% right. Remember the study I've talked about many times on this channel. Harvard economists tell us that if you have $1 of money sitting in your bank account, you are nearly 100% likely to spend it. If you have that money in real estate or stocks or brokerage accounts, you are nearly 100% likely not to spend it. Therefore, in order to prop up the consumer should not invest, right? Consumers should keep their money in savings accounts. That's how consumers get robbed and they never end up building wealth.